Welcome to Crypto Worldwide. What we're going to be discussing today is Bitcoin is not a stock. It's going to be a general explanation. And we're going to show you what the difference is between the stock and a Bitcoin. So let's start with the stock. According to the Economic Times, the definition of stock, a stock is a general term used to describe the ownership certificate of a company. A share, on the other hand, refers to the stock certificate as a particular company holding a particular company share makes you a shareholder, which also, if this company is doing well, you also receive a dividend. This makes another big difference between what a stock is and what a Bitcoin is. And you can also, stocks you typically, as far as I understand, you have to buy a full share of stock. That will be important. Now let's get into what is a Bitcoin. Bitcoin, according to Wikipedia, Bitcoin is a cryptocurrency, a form of electronic cash. It is a decentralized digital currency without a central bank or single administrator that can be sent from user to user on a peer-to-peer Bitcoin network without the need for a bank or anyone else but them. Transactions are verified by the network nodes through cryptography and recorded in a public distributed ledger called a blockchain. Bitcoin was invented by an unknown person or group of people using the name Satoshi Nakamoto and released as open source in 2009. It's broken up to pieces. The Satoshi is currently the smallest unit of the Bitcoin currency recorded on a blockchain. It is 100 millionth of a single Bitcoin. Let me show you in general how that works. Okay, let's call us A. We're on our computer. We owe somebody some money, or we want to buy something. So we're number A. So we take it and we get our key and our address, and we get their address and we send it. The transaction is represented as a block on the blockchain. Next step. The block is broadcast to every partner in the network. Typically, it's the miners, the people mining the coin. In this network, approved the transaction is valid. It goes through all the different miners to confirm that this is a true transaction. Next step. The block then can be added to the chain, which provides an indelible and transparent record of the transaction. Then the money moves to B, the person we wanted to send it to. What we're going to explain next is what is Ethereum and a token with examples. Ethereum. If you're enjoying the video, please like and share and subscribe to the video right over here. Thank you. Ethereum is similar to Bitcoin. They're all both on a blockchain. Bitcoin is the number one coin. Ethereum is the number two coin. As you can see, it's the number two coin. It's going for like $156 at today's price. Ethereum is a decentralized platform that runs smart contracts, application that runs exactly as programmed without any possibility of downtime, censorship, fraud, or third-party interference. These apps run on a custom-built blockchain, an enormously powerful shared global infrastructure that can move value around to represent the ownership of property. One of the tokens we're going to speak of off the Ethereum blockchain is Basic Attention Token, trading at 14 cents. Basic Attention Token radically improves the efficiency of digital advertising by creating a new token that can be exchanged between publishers, advertisers, and users. It all happens on the Ethereum blockchain. This is a little video from the Basic Attention Token website. And we're going to play a little bit of this in different spots.
I'm Brendan Eich. I created JavaScript at Netscape, then founded the Mozilla project in Firefox. I'm now doing Brave as a new browser and a new system for properly valuing user attention.
Okay, now let's move it along here.
Centralized ad exchange, and that must involve a new kind of currency for user attention, and that's the basic attention token. The token is derived from and therefore denominates user attention. Attention is really just focused mental engagement on an advertisement, on great content, on whatever the user is looking at. The browser can anonymously and privately monitor your attention as you view pages in tabs, and it can do this in a way that is highly accurate and highly private. We think this is essential to avoiding fraud and malvertising problems in the current ecosystem. Publishers will receive tokens.
So that's what that basically is. There's more. Breaking news. Funny thing happened when I started making this video. This news just came out. From Bloomberg, on January 3rd of 2019, announced that Tesla stocks on a blockchain offering hints of where crypto is headed. So let me clarify real quick before I get a little more into this article. The stocks, you're actually not buying stocks. It is not in the U.S. It's basically going to be tokens off the Ethereum platform, which we have discussed a little bit earlier. So let's get in a little bit about, in general, what is going on over here with this. Basically, it's a digital exchange opening next week will enable investors to trade in companies including Apple, Facebook, and Tesla outside of the U.S., even when the stock market is closed. Other note, Securities and Exchange Commission does not regulate this place. And when you buy the token, you're not actually buying the stock. You have the company DX Exchange is the one that literally owns and holds the stock, and you have to trust them. So let's get a little more in here. The DX Exchange, which has offices in Estonia and Israel, will offer digital tokens based on the top NASDAQ companies. The exchange virtual stock offering will provide tests of investors' appetite for products that seek to improve upon mainstream financial markets by using technologies of the cryptocurrencies. DX will offer digital stocks or tokens based on actual shares bought and held by partners MPS, which is Marketplace Securities Ltd. Tokens will be based on Ethereum network with the amount of correspondence to demand in DX Exchange. So that you have to trust them if it is, or they are actually holding those. I don't really want to get into this more. You can always read this article, but basically what's going on here is you're not buying a stock. Third party, you have to depend on them to pay you if they say they're paying dividends, but it's not a stock. And it's not in the country, and it's not regulated by the Securities and Exchange of the USA. So I thought that was a really interesting thing. But then again, this might be the beginning of a different way of trading where everybody can get in, because I believe you can also say there's $1,000 stock. As far as I heard from other reports, you can maybe, instead of buying you don't have $1,000, maybe you have $50. Well, you can buy enough tokens to purchase $50 worth of, say, Tesla, if you like Tesla, or Apple, if you like Apple. I think that's a very interesting concept. We will have to see where that goes. But let's get back to the video. It appears that the evolution of cryptocurrency continues. I hope you enjoyed the video. If you did, please like, subscribe, and share the video. You can do that right over here. Thanks a lot for watching. Thanks for watching again. Hope to see you some other time. Bye.